The language of business. Accounting is a language of business. First of all, we have to understand what is business. Some people don't have a clear idea about the business. So, what is business? Business means any activity which is performed for profit motive. The motive of the activity must be to earn profit. There are many types of businesses, but in the broad sense, we can divide business. It is of only three types. Number one, trading, which we call merchandising business. In such business, we just purchase goods in deliverable state, get our profit and sold them. In other words, we purchase from wholesaler, we are the retailer, and we sold the goods to our customers at a particular price. The second one is non-trading, which is also called service business. In such type of business, we do not sell any type of goods, but we just provide our services and get amount from it. Therefore, it is called non-trading or service business. The third business is manufacturing business. In manufacturing business, we first manufacture goods by three elements. The age level students are well aware of it. Three elements. Number one, direct material. Number two, direct labor. And the third one is indirect manufacturing expenses, which is also called factory overheads. By combining these three elements, we get finished goods. So now, let's back to our word accounting. Accounting is basically a compound word, that is accounts plus counting. In accounting, we count the amounts which are written in various accounts, therefore to find out the profit or loss which is earned or which is observed by the business. There are five main accounts. Which are also known as five pillars of accounting. The five pillars of accounting are: number one, assets. Number two, liabilities. Number three, capital or proprietorship. And number four, revenues. And number five, expenses. There are five main heads of account in accounting. Number one, assets. Number two, liabilities. Number three, capital or proprietorship. Number four, revenues. And the number five is expenses. For the knowledge of O and A level students, these three accounts are called balance sheet accounts, as well as real accounts. These three accounts are never closed until and unless the business is closed. We have to carried down, brought down, or in other words, by some teachers, carried forward, brought forward, carried forward, brought forward, carried down, brought down. These three accounts are always carried down and brought down to the next financial or accounting period. While these two accounts are called income statement accounts or nominal accounts. By closing the process, the closing entries, we close these two accounts each and every year, and in the new financial year, both of these accounts are open again to find out the profit or loss. Now, come back to assets. How can we define assets? Just to make it simple, assets are the resources of business. The resources on which the business is based, on behalf of which the business is running, are called asset or the resources of business. There are two types of assets. Number one, current assets. Those assets which are either cash or can be converted into cash or expense within one financial year by a teacher. This definition is also good. Those assets which changes shape within 1 year. For example, cash or bank, the amount which you have to collect from your customers. In accounting, it is known as account receivable, but in British terminology, it is called debtors, or some legal documents which is known as note receivable or bill receivable. The stationery items which we use during the daily course of business, office, supplies, the goods in trade, for selling of which we earn profit. It is called goods in trade or merchandise. Inventory. Now, some expenses we have to pay it in advance. For example, if we want to get insured our business, we have to pay insurance in advance. So, listen carefully. Any type of expense which is paid in advance is called prepaid expense. It can either be expense, whether it is salaries expense, whether it is rent expense, whether it is insurance expense, but only cash expense. Non-cash expenses like depreciation expense, bad debt expense, amortization expense are not considered under this category. These are some examples we have written, and further we'll discuss later on when we can solve the questions. Now, the second form is non-current or buy some books, fixed assets. What are the non-current or fixed assets? Those assets which provide services for more than 1 year. The life of such assets, which are called non-current or fixed asset, is more than 1 year. For example, the heavy plant and machinery which are used in manufacturing process, land and building. In this case, only building is depreciated. Land is the only fixed tangible asset which is not depreciated. Must keep this in mind. Land and building, plant and machinery, furniture and fixtures. Equipments. Motorman, trucks, buses, aeroplanes, etc., etc., etc. Now, at this point, we stop our lecture because you should have to eat as much as you can digest easily. Till now, you have to concentrate on the definitions of current assets and non-current and fixed asset. In my next lecture, in my next class, I will start from the liabilities, what we call liabilities, how can we record them, and further on. Till then, bye.